Alright, so welcome to my weekly portfolio update with Questrade, where I show you what I'm holding in my accounts and also what I plan on doing. So as of December 24th, my total equity with Questrade combined in Canadian sits at 108,216, and I've got 4 accounts with Questrade. I've got a margin account, TFSA, RRSP, and RESP. So in my margin account, I've got 0 Canadian cash, 6,600 US cash, but a total equity of 4289 US because my market value is actually negative. Some of my positions are slightly down. In my margin account, it's mostly, I only sell options in my margin account, so put spreads and naked puts for the moment. I'll get back to the positions. In my TFSA though, I've got 3,000 Canadian cash, 25,000 US cash, but total equity of 11K Canadian and 37 US. In my RSP, I've got 1,300 Canadian cash, 22 US cash, and total equity of 26 US cash, and total equity of 26 US and 1,300 Canadian. So no equities actually. I don't hold any Canadian positions in my RSP account. And my RESP, very little cash, 139 Canadian, 219 US, and 5,800 total equity. I'm only holding Intel in my RESP. So going back to my margin account, if we look at the positions, like I mentioned, they're all option selling positions. So I've got an Adobe put spread here at 465.460, expiring February 19. So if you watched last week's video, this trade was part of it already. So I basically win on this trade as long as Adobe stays above 465 by February 19. Adobe, I think right now is trading at almost $500, I think, $499, yeah. And then I've got this really fun BABA put spread, 255.250. So this expires February 19. I win on this trade as long as BABA stays above 255 come February 19. But if you look at BABA right now, if you're watching the market on Thursday, BABA I think dropped almost 20% on Thursday. So it went from 256 to 222. And if we look at the chart, let's look at the 5-day chart. Look at this beauty. Look at this, from 256 all the way down to 212. Wow, I didn't even know it reached a low of 212. That's really, really scary. So yeah, so my put spread, basically, I only win on this put spread as long as BABA stays above 255 by February 19. I still have time. I've got 53 days to go. But who says that BABA is going to come back up above 255? What if it stays where it is? What if it goes lower? Who knows, right? It's more likely that it comes back up because it doesn't deserve to get beat up like that. But who knows? That's just an opinion. But I'm going to try to manage this trade. So this is a put spread. So it's a defined risk. So there's a max loss. My max loss is basically the difference between the width of the spread minus the credit collected. But sadly, this was a rolled trade. So I actually didn't collect a lot of credit on this after rolling. I think I only collected 14 cents. So basically my max loss on this is almost $5 times 100, so $500. But I am thinking of a way to manage this trade. There's several ways, but the way that I'm most likely going to take, either I'm going to wait till maybe end of January to decide, but what I could do, because it's a put spread, that means I've got a short put and a long put. What I could do is I could sell the long put, because the long put, as you can see, is giving me a profit of $2,145. So I could sell the long put, so collect a credit of $34, for example, and then I'm left with a short put. Now this one is going to take a lot of capital for me to hold a short put. So if I do that while BABA is trading at $222 and I leave my short put at $255, the capital required for this trade is going to be almost $10,000. So that's a lot of capital that's going to be taken out of me. If I go back to my balances, my maintenance excess is combined in US is 38. So 10,000 come out of this 38. So it's a bit too much for just one trade. So what I could do is close them together. So I could close this, collect the credit. I'm left with a short put of 255, but I can roll it. I can roll it to a 170 strike and basically roll it down by paying a debit of what I collected in credit by selling the 250 put. So I'll sell the 250 put going to collect $34. So I can take that $34 and use it to roll the 255 put to a 170 strike, for example. But obviously I'm going to have to go further than February, so maybe to March, because this put here, I'm going to have to pay $38 to close it. So I'm going to pay $38, but remember I collected $34. So I'm still down about $4. I'm going to make up the $4 by selling the 170 put of March. So now I'm still open. The trade is I'm still in the trade, but I'm in a much safer position. I've got a 170 strike for March. And as long as BABA stays above 170 by March, then I can scratch the trade. No loss, no profit. And how much capital does that take from me? So it all depends where BABA trades. If BABA stays at around 222 and I sell the 170 short put, it's going to take only $1,460 of capital for me to hold the trade. But if BABA drops, let's say it drops to 200, the capital required goes to 3,000. If BABA drops to 180, capital required goes up. If it drops to 170, capital required goes to 5,100. But if that happens, which I think is unlikely, I think the most likely scenario is that BABA starts to go up. But if that happens, then I would just roll again to a further expiry and I could roll down. So I think that's the action plan that I'm going to take with this BABA put spread that's completely breached. But anyways, when BABA dropped on Thursday, I decided to sell a new put spread lower at a 200 strike. So 200, 195. I didn't even know it went to 212. I sold this put spread when BABA was at 220. I guess if I maybe placed a more exaggerated trade, I probably could have gotten a better entry. But regardless, I placed this trade when BABA was at 220 and I collected $1. Actually collected a little bit, $1.03. And it's actually showing a small profit right now, as you can see here. So for January 22nd, 200, 195 put. So this put spread is obviously looks better than this put spread here at 255. I also opened a put spread on Beyond Meat February 19 at a 115, 110. Once again, I profit from this trade as long as Beyond Meat stays above 115 come February 19. But as time goes by, I can actually close this trade for a profit. I don't have to wait till expiry. I collected about $1.02 on this trade. And I did one contract, so that's times 100. CRM is a put spread, I think was a rolled put spread from earnings. So I've got a put spread at 225, 220 for January 8th. It's showing a small profit, but not enough to be closed. I need CRM or Salesforce to stay above 225 by January 8th. Right now, I think it's at 229, but it has to stay above 225 by January 8th. I've got naked puts here on Corsair and Fubo TV. 2 contracts on each. I've got the 35 put and the 30 put. January 15 expiry as well. So on Corsair, I collected $2.30. It's worth $2.90, so I'm losing money on that. And Fubo TV, I collected $1.50. It's worth $1.58 right now, so I'm losing a bit of money on that as well. And basically, for me to win on this trade, I need Corsair to be above 35 by January 15, and I need Fubo to be above 30 by January 15. If it isn't, I can roll the put strike to further expire. I can roll it to February and collect the credit while I wait for these stocks to recover. And if I want, I can even roll the strikes down for a smaller credit to February while I wait for the stock to stay above those new strikes, but we'll see what happens. I've got a Moderna put spread February 19 expiry as well, 90 strike. So once again, I win on this trade as long as Moderna stays above 90 by February 19. I collected 98 cents, so $98. I've got an Nvidia put spread at 475, 470 expiring January 15. Opened this December 9th, so a while back. Collected $1 and not able to close it. It's showing a small profit, but not enough to close. I'll try to close it at around 40 cents. That will give me a $60 profit. I've got a put spread on PDD. I opened for February 19. I opened it December 22nd for February 19, 115, 110 strikes. And it's actually slightly profitable. On Thursday when BABA dropped, this stock went up. But I've got 53 days to go, so obviously I'm not able to close it yet. But hopefully I'll be able to close it soon. Collected $100 on that. And it's already showing maybe a $30 profit in just 2 days. I've got another naked put on Sumo Logic at a 30 put, 30 strike, January 15, collected $2.10. It's worth $2.15, so it's showing a $5 loss. And finally, in my margin account, I've got a Zoom put spread for January 22nd at a 330 strike, collected $1. Showing a small profit, is it? I think it's showing a small profit, yeah, because the premiums have dropped in value, as you can see here. See, what if I did a naked put on Zoom instead of a put spread? What if I just sold the 330 put while Zoom was trading at around 380? Would have collected $7.45. It's already worth $6.86, so I would be already making a $60 profit. And let's just see how much capital it would have taken from me. So Zoom was trading at around 380, and if I sold the 330 strike, it would take about $6,400 of capital. It's not bad, I guess. What would be bad is if Zoom started to drop or continue dropping. Let's say it dropped to 350, then capital required is 8,500. If it drops to 330, capital required is 9,900. All right, so these are the positions in my margin account. So let's go look at my TFSA. So an advantage to Questrade is that TFSA can be linked to the margin account. So most of my buying power in my margin account actually comes from my TFSA. Because if you go to my margin account, I don't have that much. I only have 60 in equity. Actually, I only have 4,200 equity. But I'm placing trades that require more than $4,200 of equity. So the equity or the buying power comes from my TFSA that's used as collateral, which can only be done with Questrade. So in my TFSA, they're mostly dividend stocks, but I've got one covered call on AMD here at an 85 strike. So, but I did this to replicate a naked put, basically. So I bought 100 shares of NVIDIA at 91.11, and then I sold an in-the-money covered call at an 85 strike for $8.11. So that means I bought for 91.11, but I collected right away $8.11. So my net debit, my net cost for this trade is $83, but the stock is trading at 91.81. But my max selling price is 85 because I sold a covered call on it. So if my max selling price is 85, come January 15, if AMD is trading above 85, anywhere above 85, my max selling price will be 85, but my net cost is 83. So I make a $2 profit. 85 divided by 83, that's 2.4% with 18 days to go. So it's a decent return. Why would I do that? Because it gives me a better chance of making that return. As long as AMD stays above 85, I make my 2.3 or 2.4% or $200 in this case. And I can get out of the trade early. I don't have to wait till expiry. Maybe next week I can close it for $84. So I paid 83 to get in. I can sell it for 84 while NVIDIA is still trading at 91. While NVIDIA is not moving, I can still make a profit from this trade. That's the advantage of selling options. So the rest of my positions are dividend stocks. I've got Bell, Bank of Nova Scotia, the Choice Properties. I've got gold, which is not a dividend stock. Just wanted some exposure to gold. It's actually the only position that's down with Bell. I've got Manulife. I've got MMP. I've got Realty Income. I've got Pizza. I've got RioCan. I've got AT&T, and I've got TD. And I've got a list of dividend stocks in my watch list that I'm watching. If they drop compared to March prices, I want to get in. I mean, Simon Properties was trading below 60s at some point. I thought about it, but didn't buy it. And then when it flew to 84 or even in the 90s, I kind of regretted it. But I think it would have been a good buy. I'm eyeing New York Mortgage Trust, Annaly Capital Management. So these are some stocks that I'm eyeing. In case they drop some more, I'll try to get in for dividends. And I keep adding to the list when things come up. And if you have any suggestions for dividend stocks, leave them in the comment section below. In my RSP, I've got two positions and they're both covered calls. I've got Rocket at 21.5, which expires January 8th. And I've got Virgin Galactic. I think I made a mistake on this one. When Virgin Galactic dropped hard, I decided to roll all the way to April 16. I think I should have waited because I don't think this was a good trade, but whatever, I'm stuck in it right now. I've got a covered call till April 16 at a 23 strike. Collected a lot of credits, of course, on the way, but I think I would have collected more if I just took it 1 month at a time. So now this trade has 109 days to go. I'm up about $200 on the covered call that I sold, but I can't get out of the trade yet because I still have 109 days to go. And my max selling price is 23, which I cannot fill right now. I need this call option to decay more, or I need Virgin Galactic to really jump. I also sold my Oaktree acquisition SPAC. Obviously I sold it too soon. I think it's trading at $14 now. but I bought it at 10.25 and I sold it at 12.15. And if we see where it's trading at right now, it's trading at $15. Oh yeah, definitely sold it too soon, like always. Story of my life. And finally, in my RESP, I've got Intel, which this stock, I don't know what's wrong. I don't know what's going on with it, but it was trading at almost $52 1 or 2 weeks ago. I think last week, and then it dropped again to 46, 47, 46. But I've got a covered call right now. My cost is 56 and stock's at 47, so I'm down for sure, but I'm selling calls until the stock recovers. Right now, the last call that I sold is February 19 at a 55 strike. But definitely, as soon as Intel reaches 55 and I can get out of this trade, I'm gonna get out, and I'm not gonna do this trade again. I think I would continue with my RSP. My plan would be to buy. Would probably do the same thing. I'd probably do maybe covered calls on stocks that have higher premiums, like I'm doing in my RRSP. Maybe some dividend stocks as well, and maybe a trade similar to this AMD trade, which is an in-the-money covered call that sort of simulates a naked put or a cash secured put. So this was my weekly portfolio update, and I get asked often, so overall, are you down or up with your portfolio at this balance? So overall, I'm definitely down, definitely because of March this year. Definitely hurt me. I don't know what the exact amount is, but I'm pretty sure overall I am down. But I mean, it's a learning process. I enjoy the process. I'm getting better every day, discovering new ways to manage my portfolio. So no regrets as long as I'm learning as I'm going. But I'm always open to feedback and suggestions, so leave in the comment section below. And like always, if you can open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. Also, if you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.